don't even know what it costs. I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, I can't take no loss. Yeah, I don't even know what it costs. Yeah, I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time. Think it's my year.
Hey, good morning, everybody. Welcome to the morning show here on Stock Market TV. Spencer Israel, JC Parets, Steve Strazza, Alfonso de Pablos with you on this fine Wednesday morning. It's hump day. Okay, so yesterday we spent the entire show talking about bull market, month of candles, great month, bullish charts. Yesterday, got ourselves a little volatility. Kind of happened right off the open there. We got the old geopolitical trick, right? So interesting action yesterday, interesting action overnight too. I want to talk about what's happening in energy markets. Obviously those are reacting to the developments in the Middle East. China's having another big session here today. I want to hit on that as well. What else? Nike, not so good there. Humana, disaster stock of the day. We'll have Brian Lund on the show in a little bit. We'll have Mary on the show in a little bit. So that's what we got going on. What up, chat? How we doing? I do not want a donut, but thank you for asking. Project Edible. All right, here we go. Bring on our guys, shall we? We shall.
All right, ladies and gentlemen, we are back. Big day today, Spencer Israel. Big day. Are you as excited as I am?
Yeah, big day in All-Star Charts land, that's for sure.
Big day at All-Star Charts land, which to me makes it a big day for everybody. If you're in the know, if you know, you know. So what do we got today? We got the monthly chart strategy session that we do at the beginning of every month. I don't know, maybe my favorite thing we do here, right, is take a step back, zoom out, identify primary trends. That's what these monthly conference calls are all about. In the middle of the month, we dive into more tactical opportunities and dive into bigger themes. Not that we won't do that tonight. We'll still go over individual ideas. We'll focus on individual themes, but we do our best. At least I do. I can't help myself sometimes, but I try to really zoom out, look at these monthly candles. We got quarterly data as well. So we'll be diving into that. And then if that wasn't enough, we are in week two. Week two of our 12-week mastermind begins today, and it is momentum week. I just love the sound of that, right? It's momentum week. You like that, Spencer?
Yeah, I like the sound of that.
We know that I get asked all the time, JC, what is the most important technical indicator? Well, the most important technical indicator is price. That is number one by far and away. And then a far second is everything else. And at the top of that everything else list, in my opinion, has to be momentum. We know momentum exists. We know we have the data, white papers, PhDs, the whole thing. Price, asset prices trend. Momentum exists. Positive momentum is indicative of healthy markets and prices that go up, etc., etc. We will be discussing all of that today also. So week two of the mastermind and the monthly chart strategy session today. It's a lot. It sounds exhausting. You think I can handle it, Spencer? You think I can do it?
If anyone can handle it, you certainly can. I'm dropping a QR code right now on the screen. There it is. That link will get you to a page if you are interested in not just the conference call and not just the mastermind, but both those things. That's the page.
What a day. And it's hump day. And, since I teach my kids how to say animal noises, right? Like the cow goes moo and the horse goes neigh. They think that the camel says hump day, right? So like they think that that's what they're 1 year old. So they don't know. They think that that's what the camel actually says. So we're at the zoo and we're walking by the camels and I'm pushing the stroller with the twins and they're going hump day.
Pretty good.
It is pretty good.
There are worse things. There are worse mistakes to make than that. That's actually a pretty good one. So, all right. Enough about that.
Shall we?
Let's do some state of the markets. Yep.
Do it.
o'clock.
All right, ladies and gentlemen, we've got the Dow futures down 80 points this morning, 42,400, hovering near new all-time highs. S&P 500, 5750, down 0.25% this morning. NASDAQ down slightly, not as much as the others, down 20 points, just under 20,000 for the NASDAQ. 30-year bond futures down 0.2%, 124. Crude oil up almost 3%, pushing 72. Copper up 0.2%. 462. Gold down 0.2%, 2675. Silver up 0.5%, just under 32. With the volatility index just under 20. Over in the old funny money, we've got Bitcoin up 0.5%, 61,000. Ethereum up about 1/3%, 2450. Solana 145, flat on the day. Binance flat on the day, just under 550. Total crypto market cap, Spencer Israel, 2.09 trillion, with Bitcoin dominance up still above 57%. What are your thoughts on this morning's futures?
I normally I don't have too many thoughts on the overnight futures because normally they don't move a whole lot, but I don't know. We had some moving overnight. We had some shenanigans in oil land, right? Energy land, which tends to happen every time there's escalation of tensions or worse in the Middle East. So that interests me a little bit. We're just watching oil here this morning. Watching the DXY. Steve and Alfonso both talked about that in their notes yesterday. That's not so kind of watching that today. In China, I don't really know why China is up like it is up this morning. I haven't looked super hard, but
it's up because it's a bull market, Spencer.
It's ripping, absolutely ripping here this morning. I came in and I saw a stock I hadn't thought of in a very long time. Up fintech, Tiger, TIGR was up like 30% at one point this morning. 28% now. So we got some big moves here overnight. Big moves. And this morning. That's what's on my mind.
What about the Jewish New Year? Is that on your mind at all today?
Yeah, it's gonna be a day for you and a day for me. Actually tomorrow is the big day because tomorrow I'm hosting. But yeah, today is the start of the tonight actually really is the start of the Jewish New Year. So happy New Year to all those who celebrate. Today, tomorrow, we'll celebrate, be merry, eat, drink, and then we will repent for our sins in a week and a half. I don't know why we repent for our sins after the new year and not before the new year. That never made sense to me, but that's the way it goes.
So the old saying as it goes is sell Rosh Hashanah, buy Yom Kippur, right? So
that is the saying. I've never bothered to look into. I'm sure Jeff Hirsch has done the work on this. I have not.
I was actually just looking at it this morning.
Yeah.
Of course I was.
I can't imagine it actually works ever.
No, it works. Returns are subpar. The market is down more often than it's up during this period. The market doesn't take favorably to the Jewish New Year. It doesn't kick into high gear again until after Yom Kippur, until after the Jewish community has repented for their sins, as you said, right? Isn't Yom Kippur the holiest holiday?
Yes,
in Jewish calendar.
It's the Sabbath of the Sabbaths, but yeah, I don't know. So
I don't have the data as to why. But I think we can all agree that there is a massive Jewish population on Wall Street, and that may impact markets.
Well,
I mean, that's the only thing I could think of.
Depending on the year, there is anywhere from like 5 to 7 market days in between, right? So it's not a long period of time. We're talking about 1 week here, right? Or maybe a week and a half, right? In the case of this year. So I don't know.
So Rosh Hashanah by Yom Kippur. That's how I learned it. But as usual, by the way, just because this is a seasonally weak period for equities during these Jewish holidays, doesn't mean that we're just going to go to cash going into this period. Quite the opposite, actually. We want to look at how markets behaved after the fact. Did the markets respect those seasonal trends? Was the market weak during a period where seasonally it's supposed to be weak, or was the market strong? And I think this gets back to kind of September, right? Just in general, how we look at seasonality. September is supposed to be the worst month of the year.
And it was not.
It's supposed to be. We know it is historically the worst month of the year by far, by the way. So, how did stocks perform? When you look at all of the indexes returned above average gains. So, you had above average returns for any month, not just the month of September, above average returns in general across the board for September in what is historically the worst month. So when the market ignores these seasonal trends, that to me is the signal. You saw the same thing in 2016 going into the Trump victory. You had the media, these depressed people, very angry at who the president was, telling you that if Trump wins the election, expect high volatility, the market's going to crash. These idiots couldn't have been more wrong. After Trump was elected, you had one of the greatest and least volatile years in the history of the United States stock market, the exact opposite of what you were being told. Now, here's the thing. The seasonal strength around this time was already telling you, right? It was the seasonality that was giving you the heads up of that strength, in my opinion, regardless of whether it was Trump or Hillary Clinton. Like, I don't even think it had anything to do with Trump. I mean, we'll never know, but it was really just the sentiment was super pessimistic. Sound familiar? The market was strong during a seasonally weak period. Sound familiar? Right? So a lot of things are reminding me of that period. And here we are again. So.
Wait, actually, a good point on this topic from Rachel. I didn't think about this. Usually, the Jewish holidays are in September, which, as you said, is a weak period, right? Usually a weak month of the year. So maybe that is more of the reason for that Sel Rosh Ba Yom thing, that the fact that they happen in the worst month of the year.
Sel Rosh Ba Yom. I haven't heard that yet.
Right.
Sel Rosh Ba Yom.
Right.
I like that.
Good point, Rachel. Typically, the holidays are in the worst month of the year, so that probably has more to do with it than anything else. So anyway,
by the way, I love Rachel. Shout out Rachel. And Spencer, it's a good attempt there, but the seasonal weakness goes into October. So,
all right. Well,
love you, Rachel. Nice try though. I see you.
Whatever.
A for effort, but the seasonal weakness goes into early October, so that doesn't really matter. But anyway, I'm curious to see how this turns out. Can you please throw up slide 2? Because this, I think, is going understated. And, part of the reason why I think pessimism still reigns, and despite the market making new all-time highs every month, investors are still, sad and pessimistic. I think a lot of that has to do with the massive underperformance from technology stocks. So here we're looking at 2023 and 2024, that gray line separating the years. You can see that into the end of last year, you still had that technology outperforming at the large cap level. But the small cap tech was already underperforming the entire back half of last year, and that has continued all of this year. Small cap tech is actually down in 2024. Small cap tech is down over 3% just this year alone. That's how bad tech has been. And then the large caps, again, underperforming the S&P 500 this year. If you go to the next slide, you'll see that technology was actually down. Large cap tech was down in Q3, believe it or not. Massive underperformer in a market where industrials, financials, and consumer discretionary are all up double digits for the quarter. Technology was negative. Like, you want to talk about sector rotation, what does JC mean by sector rotation? This is what that means. If you were ever wondering what sector rotation looks like, and sector rotation is the lifeblood of a bull market, and all those things we say all the time, here you go. Exhibit A. Industrials, financials, discretionary, leading the way. People talk about utilities like leading the way. Utilities don't matter. You understand? The utilities don't matter at all. You realize that, Spencer? If you add up the market capitalization of all the utilities, it's like $1 trillion and change.
Hold on. When you say they don't matter, what you mean is they don't matter in terms of the performance of the overall market, but they do matter.
Every single utility stock could disappear tomorrow and it won't matter.
But the performance of the utilities as a group matters for what it says about the state the stage of the cycle we're in, right? Like it.
No, maybe interest rates, not so much for equities, right? Utilities have been leaders in bull markets before. So the fact that they're a leader this year, like it's not that big of a deal. Not to mention they're so irrelevant. Real estate too, for that matter. Real estate's pretty irrelevant, super small. When you're looking at the big sectors, these industrials, financials, consumer discretionaries, these are the offensive sectors. These are the leaders. Utilities, the worst or the best.
Okay, fine. So couldn't we also just like get rid of any one defensive or offensive sector and be like, all right, they're gone. Doesn't matter, right? I mean, we could get rid of utilities.
No, because consumer staples play a huge role in this market. Consumer staples are not small. And the U.S. has a relatively small weighting to consumer staples. It's only 6%. You have other countries that have bigger, and it's been a bigger weighting in the United States before. So consumer staples are 3 times the size of utilities, right? About 20% the size of the technology index now. So that's the big one. But anyway, the point is that the rotation here has been massive. And go back to that technology on a relative basis. How do you guys feel about this? Do you think that you think most investors are aware of just how much discretionary technology is underperformed? You think this is common knowledge, Spencer? I don't.
I think they probably don't know, and they probably don't care as long as the Qs are at or near new highs, right?
In my opinion, I think they do care. I think that the underperformance from tech, whether they realize it or not, is part of the reason why investors are so pessimistic. The stock market making new all-time highs every month.
Maybe. I mean, if you look at just the mega caps, they look pretty juicy. They look pretty good. So
underperforming the whole year.
Again, but they're like within shouting distance of all-time highs, all of them, right?
Maybe, but underperforming all year. Is all I'm saying. Just interesting to note. Is all. Okay. I think that this is. I don't know if it's all of it. I don't think people are pessimistic because we're going into the Jewish New Year, right?
No,
I think they're pessimistic because their tech stocks aren't doing as well.
Well, the bar is people's frame of reference is messed up because
that's also true, Spencer. You're absolutely right. I agree. Right? It's a high bar, right? To your point.
You go through a period like we had in like January, right? In February, right? In Nvidia, right? Or in all of tech, really, and then that becomes the bar, and like that's not sustainable long term, right? For all the time. So people just maybe they're bummed when they're not making 10% a month, right? But that's just not how it works. So
go Grant's right, opportunity cost. That's right. People have a heavy weighting in technology. So they're missing out on the gains in the other places. It's a good point, Grant. Shout out, Grant. All right. I got one more interesting divergence. We talk about Dow theory. This one is a little bit more. This is the Dow theory of vice, right? The Dow theory of vice. If you could throw up the RCI holdings. So this has been historically, a great tell for investors' appetite for spending money irresponsibly. And spending money irresponsibly without care is usually evidence that things are good, right? And when they're not spending money irresponsibly, and RCI Hospitality is not keeping up with the indexes, usually it's a heads up that there might be something wrong underneath the surface, kind of like a Dow theory divergence.
This is so idiosyncratic, man. I think you're reaching.
I'm reaching for what?
Come on. The performance of one random discretionary stock that's not even
First
large.
of all, it's not random discretionary. I would argue that it is way down the curve of the most irresponsible spending habits. No?
This is a $300 million stock.
Yeah, it's a $300 million stock because it's just not as scalable as something like a software company. But we're not going to hold it against it. I mean, listen, it owns.
We do that all the time. We do that all the time, though.
Tootsie's, Rick's Cabaret, Foxy's Cabaret, Diamond Cabaret. I mean, we could bring in Steve Strazza. It owns Playmates. Steve Strazza, our resident channel checker here, if he wants to come in and discuss what's happening here.
Speaking of,
I don't want to overthink it, but I would be hard pressed to not mention it because it does stand out. Like it's not like a small divergence. This thing's been going down. This thing's been going down all year, despite the stock market continuing to make new all-time highs. Right?
I just remember that Playboy SPACed 73 cents. Cool. Anyway,
no thoughts. Strazza, come in.
You're reaching. Come on.
Am I? You think I'm reaching?
Steve, tell him he's reaching. Come on now.
I don't think Strazza's going to disagree. Didn't in The Big Short, didn't they include the what do they call them? The entertainers? We're calling them entertainers? We'll call them entertainers.
Sure.
The entertainers were chiming in on the sentiment. You think that they included that in the movie just for show? You don't think that there's something real behind that?
I think this does not say volumes about the broader economy or the state of consumer spending.
So it's just a coincidence that RCI Hospitality stock and the stock market moves together? It's just a coincidence?
Lots of things are correlated.
All right.
Yes. Or not correlated. Lots of things. Come on, man.
Just throwing it. Listen, I'm asking the question. See, technical analysis, the beauty of technical analysis, it doesn't give us all the answers, but it certainly goes a long way in helping us ask the right questions. And I think this is one question worth asking. You're telling me that it's reaching. All right, fine. You have the right to have that opinion. I don't think it's a reach. I think it's a valid question. No? Can you think of a more irresponsible way for men to spend money?
Well, I would argue if we're talking about like the risk curve, crypto is further on that curve than this, right? I think, right? I think crypto is like, or fine.
Crypto is not discretionary spending.
Forget
Crypto's an investment.
Forget crypto. What I should have said was DraftKings. What's the other one? FanDuel. What else? DraftKings, FanDuel, Robinhood.
Robinhood probably not, but DraftKings and FanDuel, I'll give you that one. I'll give you that one.
Their 401ks and Robinhood.
But again, that comes back to investing. People think they're going to make money when they're spending money at RCI Hospitality. They ain't ever getting that back.
Steve, can you come in and help me out here? Steve, I think Steve has something to say. There we go.
Here we go.
So, this is.
I heard adult entertainment. It's like, oh.
No. What I heard was I'm supposed to have a nice quiet morning, writing an email over here, and I hear JC spreading rumors about me being the chief channel checking correspondent at Rick's Cabaret. Did I hear that right?
You didn't find the humor in that? I thought that was hilarious.
Oh my god. So why are we overlaying a chart of Rick's with the All Country World Index? I have to know.
I don't even know, and I've been here the whole time.
Evidence of risk appetite versus risk aversion. I mean,
are they expanding overseas?
Yeah.
Okay.
Obs. You're supposed to tell me these things.
Oh god.
All right, one more chart that I have for you. Slide 5, please. Spencer wanted to talk about energy. Crude oil up 3%, pushing 72 on the day. I gotta tell you, as underperforming as energy has been, the resiliency in ExxonMobil continues to be pretty damn impressive. Yeah. Strazza, any thoughts?
No, 100%. This chart is about to break out. We just had crude oil, looking like it was on the brink of collapse at the lower bounds of its range. Somebody tell ExxonMobil. So, crude oil doesn't need to break out for this Exxon chart to break out. It just needs to dig in, and it has these last 2 days now.
And if you look at RBOB, you look at heating oil, all these things, they look exactly the same.
Yeah, some of them would look even slightly worse, but for now they're holding. They're holding where they need to. Look, I think something like this, JC, where XLE still range bound, hasn't broken out, you buy the ones that look the best. You buy the ones that are leading out of those ranges, and that would be Exxon. You could also buy, the blue chip, one of the quality players in the space. I think Exxon is far and away the best vehicle for energy right now. While it's
large cap vehicle, there's some stuff down the cap scale, right?
Yeah, but it's still unclear like how energy more broadly is doing here. So I would feel more comfortable hanging out in one of the big guys, one of the quality names like Exxon.
Like this chart. I'm gonna hop now. I got a big day today. Conference call and our momentum mastermind. Any topics you guys think I should cover on tonight's momentum mastermind?
Just talk
please
about.
Feel free to chime in.
Make sure you do a little bit on the Mo thrusts. The Mo thrust. You could use.
You're going to do the Mo thrust on Friday, so I will allude to it. If you want, why don't you do this? Why don't you send me a chart and I'll tease Friday's lab. How's that?
Got it.
All right, guys. Tell Brian Lund I said hello. Tell Kenny I said what's up. I will see you today at 4 o'clock for the mastermind and 6 o'clock for the conference call. Woo! Busy day.
Chat's talking about Nick Colas. Should I try? I don't know Nick at all. Should I try to get him on the show? I feel like I should. I probably should.
I know that name.
Yeah, Josh Brown name dropped him when he was on our show. He said that was one of like the smartest guys he knows.
I know.
So hey, but before we move on to other things I want to talk about, let's bring on Kenny real fast and see. I'm sure he's had a busy day because we're, like I said, a lot of movement this morning. So let's see what Kenny's doing, and then we'll talk about the things I want to talk about and you want to talk about. How about that?
Yep.
It's been a long time coming. They ain't come from my club, they tugged it. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Hello. What's going on?
Oh, I just got done with the Benzinga. Me, Joel Khan and Dennis Dick hanging out.
I miss those guys. You know what sucks? I never got the chance to visit Dennis's trade cave.
Ooh.
Because now he lives in like way the hell up there in like the middle of nowhere in Canada, and I'm never gonna get there in my life, right? But when he was closer, I had a chance. I didn't take it. I should have. But oh well. How are they doing? They doing good?
Yeah. Same old thing, man. I love those guys. Joel should have a second job doing horse race announcing.
I know.
Coming down the stretch, it's gonna be fantastic.
I know. Anyway, what are you watching here?
We were just talking about ripping the Chinese stocks. Again, I don't swing trade, but when I do, I buy an entire country. So we're cashing out. We're cashing out of some of it, but if you bought the Alibaba 120s for November, I was explaining to people how to short a stock against the calls you own. Again, when you walk in and you've got that winner, and if you bought some calls yesterday and you're obviously seeing what Alibaba is doing now, how do you lock into that trade before you can sell your options? The only way to do it is if you sell the stock short and then exercise those calls. So I was explaining that to some people. Again, it's a little bit over some people's heads, but it's really not that confusing. You own the stock with the calls, and all you're doing is shorting it. So you're kind of preempting your sell by doing it in the pre-market. So again, that's what we've been doing so far this morning. But what an amazing breakout. And we were just talking about you on the show because yesterday, and this is what I love about being a trader and just being live.
Talking about me?
We were talking about you because it was really boring yesterday. There was nothing ticking. There was nothing going on.
Yesterday was a slow day.
But then it wasn't a slow day. Within 5 minutes, it became an extravaganza.
It was slow until like 9:30, and then it wasn't so slow anymore.
It was like it was waiting, was setting us up. But listen, I love disasters. I'm going to focus on Humana. I have never actually traded this stock, so I'm going to be really careful. Even though it's getting slaughtered, it looks like it could go even lower. We're talking about 2015 levels. So we're talking about I think it got down to, I don't know. I see a tick at 207. I'm not sure if that's real or not. But this is talking about, we're talking about May 2015.
Wait, what are we talking about
now? So I'm kind of getting interested down here.
Wait, I'm sorry.
You got Nike as well. So
what are we talking about at 2015 levels?
Humana just getting absolutely hammered down another 20%.
So I spent the morning trying to understand what the hell the headline even meant, because it was a bunch of words and I didn't know what they meant. But now I think I do. You want me to explain it to you? Do you even care?
I like big words. Yeah. Explain it to me. What happened?
So essentially, Medicare pays out bonuses to the insurers based on the amount of people they insure that are in, like, because there's like a star rating system. So they based on how many people they insure that are above a certain threshold, like above 3.5 stars or whatever, above 4 stars, they pay out bonuses to the insurers based on that. Humana came out and said, the percentage of our members who are below that threshold it just went way up, right? Essentially, the percentage of people that were above the threshold just went way down, right? So they're going to get way less money for Medicare. It's essentially what happened.
I gotcha.
Yeah.
All right. Well, again, if you're a long, I haven't looked at this chart pretty much in the last 9 months. I probably glanced at it during earnings season. But listen, it's already again, as far as I'm concerned, it's already been a buy this morning. Now that I'm looking at the chart, again, I've been looking at the Chinese stocks and working through that right now. But let me show you something. I don't know if you guys see my chart. Let me put it up quickly. I'll show you exactly what we love doing here. So hang on a second. Let me get my screen share. Bang, bang, bang. And right here, you should have the Humana chart up there.
Yeah, I do.
Okay. So obviously getting slaughtered. Just a brief glance. Look at this 3-year chart. This has been pretty awful for quite some time. So somebody knew something bad was coming. That's yesterday's low. So now we're down another 50. But when you just go back, so when I was showing you that look at this chart. This is from got to be 15 years ago. I was looking. So here's a 20-year chart on a monthly just to crunch it up. That's where it kind of broke out from, and that's where we are, roughly right now. So sure, it could fall down to like that 192 area. That's what our, this is a 20-year VWAP. And again,
I was going to say, I don't know if I've ever seen a 20-year VWAP before.
Listen, I never, this is one of those moments where I never thought I'd be looking at anything other than daily VWAP when I started getting into this. Later, when the market had that flash crash, the Dow Jones went to a 10-year VWAP to the penny, and that's where we bounced. And that was one of those moments where I was like, the market is rigged. It really is rigged. And just like Humana this morning, again, you don't have to believe it's rigged. It is rigged. Even in this disaster, a monstrous stock, where does it go to? Exactly 207. That's where it finds support. Exactly at 207. It's all computers. It's all rigged. So when you see the support being held and then it rallies back to the VWAP, but it gets rejected, then it breaks, that's your moment. So buy the VWAP break. That's a stock going from 219 to 226. And we're just lowly day traders. You buy 200 shares, you make 4 points, that's $800. Have a nice day. And that's kind of what we're doing. And then we call this the shuffle. So as it's shuffling along or jiggling, it's just showing you that it still wants to go higher because it's not breaking down. Give it another shot and use the VWAP as your stop. And bang, it tacks on another 11 points. Beautiful, just 100 share lots of this stock. And again, we're just lowly day traders trying to make a day's pay. And there you are. So, again, the money's been made here. I'm going to now wait to see if it comes back down to the 207. We'll start looking at options when the market opens up. And then let's go flip over to the other disaster of the day. It's Nike. So right now you're seeing how it's having a hard time. It's still VWAP's trending down. It's had this one attempt and now it's failed. That's super bearish. So when it keeps failing and failing, now you got to wait to see if it tests new lows. Consolidation under the VWAP is even better. So if Nike consolidates under the VWAP for an extended period of time today, then it breaks, buy it, especially if it gets over this, what is now a double top at what price? $83. So over the VWAP, over 83, I'm probably looking at buying that stock.
Dawson made a comment in the chat where it feels like more and more algos are prioritizing VWAP. I have a working theory that like everybody on Wall Street, like all the institutions, just use VWAP. I don't know if it's true, but it feels like if you had a massive order that you had to get into the market, what better way to do it without moving the price than by going through the VWAP, right? So
it really is. To me, it's the institutional, red light, green light, 1, 2, 3. And it's telling you what the institution is doing. Like I said, I continue to use this measly 200 share lots of Humana ain't moving the markets. You want to know what the institutions are doing, and you want to just follow the VWAP. I mean, listen, it definitely has morphed into what I thought it was when I first started trading it in 2012, 2013, and when I just started using VWAP exclusively. It's giving you a heads up of what the big players are doing, and just join in with what they're doing. You don't have to outsmart the market. You are the market. And that's what VWAP's all about. Yeah,
we should talk to like an institutional trader, because I would love to know, like, and I've talked for the handful that I've spoken to, in my years, they've said like, yeah, if we have a large order, we'll just use the VWAP, right, to get our order out there, because nobody wants to move the price of a stock. Nobody wants to do that, right? So that's how you avoid it. So yeah.
I mean, there's a lot of good ways. I mean, one of my favorite ideas behind VWAP is think of the institutional trader. So let's assume that Spencer works for Glick Incorporated Fund, right? And I give Spencer an order at the beginning of the day. Listen, I want to own 600,000 shares in Nike at the end of the day.
Right.
VWAP to me was Spencer better beat the end of the day VWAP price on the 600,000 shares that he acquires for the Glick Fund. So if the stock is traveling below the VWAP, Spencer's buying a little bit here, working his order. But then if it breaks VWAP later in the day, Spencer says, I got to start buying, because he's got to keep his average price below the VWAP or try to beat the VWAP. So when you see those late day VWAP breaks, think of the institutional trader chasing his own trade, and you help him chase by buying into it and joining in on that move. And that's one of the most simplest ways to appreciate VWAP. And that's one of my favorite trades, the late day VWAP break. Like I said, with the Nike, I'd like to see it travel under the VWAP the whole day. And let's see, something happen at 3 o'clock where it breaks and they're chasing to get that, average price down. Bang. I'll be looking to buy Nike at the end of the day. And again, that's what the beauty of day trading is. You could just sit and wait. We're just like fishermen. We're just waiting for that fish to come along. And then, I'll show you how to hook it, fricassee it, and have whatever wine you want with it. Oh, you have to ask JC about the wine.
All right.
But, that's it. It's the same day every day, and it's fantastic.
All right. See you in the room, Kenny.
All right, guys.
There's the link on the screen. That's where Kenny goes right now to actually trade, and you can watch him and follow his trades in real time as he's making them. So check it out. All right. Let's bring on. Oh wait, Steve, did you say you had a VWAP story or something?
Yeah, I was just listening to what you guys were talking about. Everything you guys were saying is true, and that's why Brian Shannon created the indicator. It wasn't just some great idea that he had. It was because institutions use it. So one of my jobs at 4:15 every day, I would get a number of emails from our prime broker, who was Goldman Sachs, and all that was in those emails was transaction detail and a report showing us how they did getting our orders filled. Yeah. And the one thing that they are benchmarking against their performance on filling those orders is the VWAP. And it was my job to review it. And if they were too far from that VWAP, complain, tell somebody above me, and then Goldman was going to hear it.
Hey, they suck.
That's right. But it's not rocket science. That's how they're all doing it, right? You have a large order. You don't want to move the market. You use the VWAP.
Not rocket science. That's the story of Wall Street. It's not rocket science.
And then, Spencer, if you think about it, right, the VWAP, the way that we use it, anchoring back to whatever date, is simply an aggregation of all of those daily VWAPs that the institutions are using to basically execute their order flow against all day. So if we go back and anchor a VWAP from August 5th, that just has all the days since August 5th, right? So,
all right. Let's see if Brian Lund has thoughts on all this.
Yeah.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Lund.
Brian Lund, how you doing?
Steve, say it with me. VWAP.
VWAP.
VWAP. There's no WAP in there.
Right. So it's WAP. The reason I call it that, I didn't learn about VWAP from Brian Shannon. If I did, I would call it VWAP too. But I knew what it was long before I knew who Brian Shannon was.
Brian hasn't actually weighed in on it. I don't think he's actually, every time I bring this up, he says, I don't care what you call it.
Oh, we asked him.
He's
what did he say?
He agrees with you.
Okay.
Yeah.
Thank you.
Right?
Do I drop the mic now and leave, Spencer?
Yeah.
I can't change the way I say things.
It depends on where in the country he is. But all right.
I'm 36 years old, Brian. I can't go from WAP to WAP at this point in the game.
Dude,
I've gone too far.
You're a youngster. You have plenty of time to change. Trust me. Okay. I did more changing between your age and my age now than I did in the first 36 years of my life. So don't give me that story.
I have a lot more complaining to go, is how I feel.
Yeah. That's funny.
Hey, Brian, before we get started, I want to know, how was your trip to my neck of the woods?
To New York, upstate New York?
Yeah.
So you know about my trip to Canada, right? Do you know about that or no?
I want to hear about
the summer, right? Yeah,
What's that?
that was like a few months ago.
Yeah, well, so it was all part of the same, I spent a month traveling, right? And I took like basically a month off. And the first part of that trip was a family trip to Canada. We went to Banff for 8 days. And the second day there, my wife fell and broke her foot, right? So my traveling started off really bad. And the reason I'm saying that is because it ended up really great with my week in upstate New York. I absolutely enjoyed. So I was in Manhattan for a day and a half. Then I drove up to Binghamton. Fantastic drive. Just, I mean, I knew upstate New York would be beautiful, but I didn't realize it would be that beautiful.
Yeah.
Was in Binghamton for a few days for an event, and then I drove back through the Poconos, right through the Pennsylvania route, and again, just absolutely stunning. So loved it. I wish I'd been there a little bit later so that maybe the trees were turning, but it was great. I stopped. I saw Mr. Perlman, had lunch. He cooked me a burger at his house on the way. It was really good.
You should have stopped and seen JC too. I didn't know you were driving to the Poconos.
So I think JC was already maybe in future proof. It's funny because I was going east.
Got
So
it.
like I was on the floor of the stock exchange.
You were already out there.
Yeah. I was sitting there talking to Jay Woods on the floor of the stock exchange, and I said, I'll see you in 4 days in my hometown in Huntington Beach. So everyone else was going westward as I was going eastward. Yeah.
Awesome. Do you think it's worth it for people if they can to make the pilgrimage to the New York Stock Exchange and to the floor?
So I'll tell you, I've never been, I've been by the stock exchange. I've never been in and down. And of course, Jay just gives you the VIP tour.
Yep.
It was so impressive. And for someone that really likes the history, as I know you guys do too, Jay took me in like the back halls. I was there like an hour and a half. And here's what's really interesting. So if you've ever been there, there's lots of tourists that are outside. Right. And you can't go in. Right. So they're all sitting there taking pictures. They're just sitting there. A lot of them are almost there like a pilgrimage. When I walked out, I had no less than 5 people who were all obviously tourists come up and what was going on in there? What was it like? I was wearing a suit and everything. And it just shows you that it's such an icon of capitalism, which not just Americans, I think, look at, but like the whole world looks at as a really incredible institution.
Yeah, one thing that helps that it's close to car traffic, right? So it's like a natural place to congregate, right? Because there's no cars.
People just they're all kind of hanging out there, almost like it's a temple or something.
Yeah, it's cool. Good spot. All right, awesome. That being said, what's going on? What do you think of what's been happening the past few days or few weeks since we last spoke? And what do you think of this China bazooka?
Yeah, I don't know. I'm not a big fan of trading Chinese stocks, just like I'm not a big fan of trading in biotech stocks, things like that, because you can just wake up. Look, you can wake up one morning, they're up 40%. You can wake up one morning and they're down 40%, right?
Oh, yeah.
So so I don't really pay much attention. I mean, I know what's going on, but that's not really where my focus is. I'm working on this concept. We were talking about age, Steve, and I'm working on this concept as I'm getting older about doing things seasonally. And I've been doing more and more trading seasonally. And I don't mean like in the Jeff Hirsch way, but I mean like how the ebbs and flows of my trading, my life, everything's going. And I had a really good quarter, right? And look, I'm the first one that will tell you if I just get to bed, right? So it was a really good quarter. And after we got that post-Fed pop, and then we couldn't go higher, we saw a lot of stocks in the 2 days after that gap up. I call it I don't like gap and crap, so I say what do I say? Pop and drop, right?
Yep.
So I saw that a lot of stocks going off of my watch list. I just started raising cash, and it was really easy. I have to tell you, like I had DraftKings, it failed, sold it, right? I had Roblox, failed, sold it. Like a lot of these things that I had held for quite a long time. And so I was mostly into cash starting this week. I have a couple of, I've got that coin position that I've got some calls written against. And like I got long-term Disney, and I think I'm trying to get Pfizer. I'm trying to hold on to my Pfizer position, but like I'm mostly cash right now. And I have to tell you, I'm in no hurry to really do anything. So it's fall, which JC, I think will agree. I don't know if you can hear, but fall is the best season, right? It's the Tom Brady of seasons. It's the GOAT, right? And so there's so many things to do besides the market. Go for a walk, have a pumpkin spice latte, put your Christmas tree up, right? So I'm just taking time away just to wait for the dust to settle a little bit, and then I'll start looking at what I want to get into.
I love this. And kind of my strategy for bear markets. I do very little, right? So I'm all for taking a day off, a week off, a month off, quarter off, take a whole bear cycle off, if that's better for your strategy.
Think about this. When do we, I think most traders and active investors out there will relate to this. When do we put on our worst trades? Usually after we've had a big run, right? After we've been very profitable, because we get cocky, we get our size bigger. And so I've started to think to myself, hey, in that last 10, 15, 20% of that run, maybe it's best to take a break. Even if I think I've got the hot hand, even if I think things are, just reset a little bit, see where I'm at, and then start fresh. And I think when you're young, you're afraid that if you do that, you're going to miss out on something. I did that for 25 years, 30 years, but now it's just, it makes more sense to just step back.
As you get older and wiser, you feel grateful that you missed out on those things.
Yeah, totally. Theoretically wiser. My wife would maybe disagree with me.
It happens to us even in small ways. I, made a couple really good trades at the end of last week. And then I'm like, oh, green light, all systems go. Right. Let's pour that money back into some speculative ARK stocks, short dated calls. Let's go. 2 days here this week, they're all blown. Like it happens. And it happens. You don't even notice it as you're doing it.
That's one of the ways that I used to. You ever have that situation where you've got like a high water mark in your account, or just maybe some round number?
You have a number that you want to be at. Yeah.
You get to it and you get above it a little bit, and then it goes down. You get to it and you get above it. Right. So here's how it used to happen to me. You have a good trade, right? Or you have a good week, and then in your mind you're playing a little bit with the house money, right? And so let's just say I made 10 grand for the week. I'll say, yeah, I'll throw 1,000 at this option, or 500 at this option, or 1,000 at this, and then they all go to shit, and then you've lost 30-40% of your money because you thought, oh, I can just play with the house money.
Been there.
Everyone's all the traders out there going like, yeah. The question is, how many times do you make that mistake? As traders, we make the same mistakes over and over. I still make the same mistakes I made 37 years ago. It's like, how do we minimize the amount of mistakes we make as we get older? That's the key.
Yeah, that's right. Make those dumb losses hurt a lot less, and you're on to something.
That's right.
I just, when I'm feeling crazy, I'll open up my Hard Rock Bets app. I'll just go crazy on there.
Some parlays. Parlays. Nice.
All right. So, Brian, things like China raining helicopter money, hard to plan for as a market participant, right? Hard to be positioned for as a trader. Hard to know that's coming. Stuff like, I don't know, more war in the Middle East. Really hard to position for. Hard to know exactly when that's going to hit and what it's going to look like. Right? We got oil moving here today. Risk assets have been hit, though, this week. Things like the dock workers and longshoremen striking. Really hard to plan for, hard to position for. What do you do in situations like this week and last week where this is just a headline-driven market and boy, oh boy, you could really get chopped up out here?
Well, look, like we were just talking about, the first thing I think people should do is step back. Don't be afraid to just go sit on your hands, right? But if you're not so inclined to do that, I have basically 3 principles about trading. And I say trading is not easy, but it doesn't have to be complicated. You're either in a risk on or a risk off mode, and you're in some version of that. And so risk on is bigger position size, more trades, and longer time frames, right? Because the market's you've got a tailwind, right? So when it's the opposite, when we get more towards the risk off, it's fewer trades because you're being more selective, right? You're not looking at that iffy chart and saying, yeah, I can take a shot at this because the whole market's behind me. So
that's right.
fewer trades, smaller position size, but that goes with, I don't need to explain that, and shorter time frames because you don't want to be caught with overnight risk, right? So you're doing more intraday trading. Maybe, if you catch something on a turn intraday, you sell half of it and the chart ends up looking pretty good. Maybe you hold half overnight, but you don't want to wake up to, what we've seen this whole week, right? Iran launching missiles or Israel invading Lebanon. I mean, those sort of things can just tank the market overnight, and you just don't want to be exposed to that risk. And you can also use options. I know you guys I'm not as big of an option guy. You guys use options. So that's another way to mitigate risk.
See, you're saying shorten your time frame. I think you can also extend your time frame to protect yourself in periods like this. For example, if I'm looking at some of these ARC stocks like Peloton, right, and I'm putting on some little options trade where I need it to move in 2 to 3 weeks, I'm probably screwed after 2 or 3 big down days, or 1 or 2 big down days like this week, right? That position's probably already shot. If I'm simply accumulating something like Roblox that's in a nice base, through this on some weakness here, and then I extend my time frame out and say I'm in for the primary trend, then that's okay too, I think.
So I'm going to use an old guy reference here. So everybody remembers the Brady Bunch, right? And so the Brady girls, you got Marcia, who is beautiful. You got Cindy, who's cute, and then you got Jan, right? Nobody likes Jan. She's the middle kid, right? The intermediate term trader or investor is the one that gets slaughtered the most, right?
Mm-hmm.
Short term, you're in and out, you're mitigating risk by time. Long term, you're mitigating risk by time, but it's that person that gets stuck. They're neither fish nor fowl in the middle. So I 100% agree with that, Steve.
I've never thought of it that way. I couldn't agree more, though. Hearing it that way, intermediate term is the hardest. Absolutely.
Totally. I mean, for me, the best, and I don't consider swing trading necessarily intermediate term. Swing trading is three days to maybe 3 weeks, give or take. I think it's more somebody that has, let's say they have a short-term mindset, then things don't go right, and then they flip it to a long-term mindset, and then they get stuck in that middle there where price just moves against them so bad that they have to sell. And then usually after they sell, that's when things start going to the moon.
What you're talking about is turning a trade into an investment.
Yeah.
We've
all done it. I've got a bunch in a drawer that were trades at one point.
Yeah. Another thing I find myself doing in more risk-on environments is loosening my stops, letting them dance, allowing for shakeouts, right? Not stopping myself out of every little down candle, and jumping entries. I'll jump an entry, just expect the base to break out or expect a flag pattern to break out. So I'll buy it while it's still coiling.
Cheating, I call it cheating. Yeah.
Yeah, cheat a little bit for sure.
Yeah. Well, that goes hand in hand with position sizing, right? You can't loosen your stops and you can't jump or cheat without a reduced position size. So again, those are the three things that I do when risk is off.
So what are you doing today? Like, do you have a way of determining, okay, has the dust kind of settled from the headlines earlier this week? Like, what are you going to look for to say, all right, we're okay here. Maybe it's go time again. Correction over. Yeah,
look, it's always going to be price action. I think I was talking to subscribers yesterday, and so we had that gap up post Fed, right? And then we just went.
Yeah, and then
say that again.
Sorry, we're still right there. We've made no progress. It's been 2 weeks.
So we went sideways for 5 days, which that's great consolidation. I love those tight ranges, right? Because for me, it's always contraction before expansion. And then we gap up. I guess that was before the Fed. Then we gap up, and then we kind of failed a little bit. We're still in about an 8 to 9 day range there. So I need to see how that range is resolved, right? Do we firm up a little bit and then start to go above it, or do we fail and drop out of it?
I was looking at the NASDAQ last week thinking to myself, this is the easiest trade on the sheets right now. Are the triple Qs really not going to head back to those all-time highs like the S&P and the Dow already has? Right. And the answer, at least for now, is nope. So when you see stuff that just looks so simple and so easy, I mean, has this not been happening all year where we get something like high and tight that looks really good and then it just fails like over and over and over again? Like I'm thinking of small caps back in July.
We've said that. Look, we've said this before. When you see a chart that looks like it's in Edwards and McGee, right? When you see a chart that looks like it's in the CMT test, there's a problem there because it never looks that like. Just take a look at IWM when it broke out that massive base, right? Beautiful breakout. Like I can't remember index breaking out with that much power ever, and then beautiful consolidation, and then started to go up and then failed, right? So I'm 100% with you on that.
I tweeted one the other day and I said, this one just looks too good. I can't trust it.
I know, right?
Speaking of patterns that look too good, are you seeing all the head and shoulders? You seeing all these head and shoulders? You're going to see them more, I'm afraid.
I saw your tweet about that. And I say, like, everybody always sees Head and Shoulders, like Head and Shoulders and cup and handles. Everybody sees them everywhere, right? But I do see a lot of stocks that are looking fairly toppy like that. So yeah. Hey, where's that? What does JC never come on my segment anymore? This is the third time I have not seen him on my
He
segment.
can't stand you. Yeah.
Hey, by the way, I'm rocking the Eddie Elfenbein shirt, right?
Oh yeah. So tell everybody what we did. So I was lucky enough to bump into Brian on like day 4 of Future. It felt like the last day of like.
It's the last half day. It's not even a real day. Yeah.
Like I wasn't planning on doing anything. So I was walking around. I met Pearls for a beach walk. I was walking around with a swag bag, bumped into Brian, and we did the damn thing. We did the rounds.
We did it hard.
Was your wife happy with what you came home with?
Oh, totally. And by the way, I'm doing this live also on Substack. This is my first live video, so I'm simulcasting. So we went to Future Proof, which is the largest wealth conference in the world now, which just happens to be down the street from my hometown. I don't know why. And so the last day, Steve and I went through all of the booths on the concourse to grab the swag, right? And they're at the point where they don't want to take it home, right? So they're like, take 5 of them, right? So I did it mostly for my, I did it for my wife. She loves the t-shirts and the lip balm things. But there's this guy that I can't remember. It's an Australian company, and I think I might have been chatting with him without you, Steve.
Orion.
Maybe the guy who was manning the booths actually just lives in Irvine, and they had these blankets. They're like beach blankets that fold, that you unfold.
Nice.
And so one side is soft and one is like slick, and they're also good for like on an airplane. I got my wife like 3 of those. Oh my God. I was the hero of the house for three days.
Winner. Yeah. That's great. Rose always loves the t-shirts too. I think I got a Charles Schwab beach towel. I mean, you get some real gems.
Totally.
Work the booths, really. And we got a pie chart subscription. So, I mean.
Yeah. They never sent me mine. She said she was going to set me up with it, and I never got. I'll have to follow up on that.
We're still going back. I got to talk to Sean today. But
I want to see what the swag's going to be like at Stocktoberfest, because it's not going to be, big name, but with that $1,000 ticket, they better have some goddamn good swag.
If they don't have some cool shit, Howard's going to hear about it. I'm excited though for Stocktoberfest.
The best backpack I ever got, and I still have it, and I love it, was one I got at Stocktoberfest like 2017. It's awesome.
Is that the Stock Twits bag?
Yeah,
awesome.
I've seen them. It's got lots of it's got lots of different like zipper areas. I love that stuff. So
I still got to book my hotel. All right. I mean, anything else? Any other words of wisdom for
Yeah, I want to
on a week like this week.
I assume you guys haven't talked about this because it happened after your show yesterday, but like, I want your take on Vinny Lingham's crypto. Like, he was not very not bullish on crypto. He was a little bit on Bitcoin, but like, I was really shocked that he was so down on crypto as a long-term play.
What a unique perspective, right?
Totally.
I talked to Patrick after, and I said, there's got to be more to that story, frankly, because if you're in since 2013, how can you not have some love left for this asset, right? If you've been in for that long, Bitcoin's been really, really good to you.
That was the takeaway I got, because Vinny was a very early mover on this, and he was very bullish. And for him to do that because most of these guys have just dug in, right? They're just like and he had 90% of what he said I didn't understand. Like, he's a very smart guy, but like, it sounded pretty plausible. Like, there are a lot of mechanics of the way that crypto is constructed that he said are just limiting, and at some point will fail, which I thought was really an interesting take.
So what Brian's talking about, just for context, we had a Twitter Spaces. Spencer, are we recording these yet? Can people go back and listen?
Yeah, I'll drop the link in the chat. Sure,
we'll drop the link, and that's why we do these spaces, because we never know who's going to drop in. We had Vinny, who I think some of you know, right? Vinny, that was the first time I was talking with him.
I don't know him, but
what a unique perspective on Bitcoin. He was an early adopter, has been super long for like a decade, and he was telling us about how he still owns some anchor positions, but he has, closed out a lot of his exposure and actually moved it into precious metals. So we were talking to a reformed Bitcoin maxi, right? Is that how you say that? A reformed laser eyes person.
Yeah. That's right.
Who is now taking his Bitcoin profits and basically plowing them into gold and silver.
How crazy is that? That was if him going bearish on crypto was crazy. The ultra crazy part was where he was reallocating, which was gold.
I was asking like stocks, bonds, any of that. No, it's very, and these guys, some of them, they do sound crazy, but our conversation with him, it seems like he's approaching the space with a very, very sober mind, which is hard to do after you've been in crypto for 10 years.
So I've met Vinny I met him at Lindsapalooza one year. He's a pretty smart, down to earth guy. But here's what I'll say, right? Because this is where a lot of people get.
Palooza.
What's that?
Lindsapalooza.
I know, what a name. This is where I get. This is where people go wrong. Vinny's a smart guy. He's got a very specific take on it. That's just a data point, right? Like, because I know there's some people that might be listening to this go, oh my God, I got to sell all my crypto and go into gold. Like,
yeah.
You got to have the technicals, right? You got to marry the tech. Whenever I hear a great fundamental story like that, the first thing I do is I start going, I look at the charts a little closer and I go, is there anything I can see there? And if I can't see it yet, great. Maybe that will start showing up in the charts in 2 weeks, 2 months, 2 years. But it's just a data point. It's not an actionable thing in itself, but it is very interesting.
Yep. What I liked about that conversation too is right before he came on, we'll have Vinny on the morning show. That was a great conversation.
Yeah.
Let's check it out on Twitter Space. Spencer just dropped the link.
Yeah.
So I was saying something that some of you thought were crazy. I was getting laughed at. I was saying Solana can very well flip Bitcoin one day. In fact, I think it does. It probably takes a couple cycles, but these things happen. We're talking about like 10, 12x in terms of outperformance.
Right.
It happens all the time, folks. So everybody was laughing at me, and then this guy Vinny comes on. And he's like, "Yeah, that's plausible." It's like,
and you're like, "Go for it."
Sometimes the charts are the best fundamental analysts. I know nothing about the Solana ecosystem. I know a lot of smart people are very excited about it and very, very bullish based on fundamental reasons. I can simply look at the long-term trend and know that there's some bullish stuff going on there.
Yeah. Well, you know me, right? I more than a year ago on Patrick's show, I turned to camera and I said, 99% of all crypto coins are going to zero. There'll be a few survivors, Bitcoin, Ethereum, maybe Solana, maybe like a Helium, maybe come rockets. One of those is going to survive. A few of those will survive, but most are going to go to zero. So
bye, Felicia. I'm with you, dude.
Yeah.
What's the matter, Spencer? Spencer's like shit.
No. I agree with what Brian said. I'm shaking my head at the come rocket thing.
Rocket.
Well, yeah. All right.
Yeah. All right. Cool. Anything else? I feel like I had a question for you, Brian, and I don't remember what it was.
I had one other thing. So you guys are talking about the Jewish holidays and how they affect the market, right? One of the things I asked Jay, because I still have not gotten an answer to this, I thought maybe Jay would know. Why is the stock market closed on Good Friday? Right? I've been doing this 37 years, and I never can figure out why it's closed on Good Friday.
You think I'm going to have an answer?
Well, so the theory is that most people think that like the stock market was, built on these very waspy, like back in the day, a lot of the workers on the floor, runners, even some of the traders were Italian immigrants, were Irish immigrants, which were heavily Catholic, right? Yeah. So it's just funny because you'd reference, I think Spencer, someone referenced that there's a lot of Jewish people that are involved in Wall Street, but they don't take, the market doesn't close for any Jewish holidays, but it does close for what I consider kind of a odd. I still get caught by surprise every year. I go, what? We're closed Friday? So anyway, I thought that was interesting.
I think it's become a tradition now more than anything. But
it's probably because it's a Friday holiday, right? The Jewish holidays don't go by day of the week, right?
That's right. And they move right because this year Hanukkah actually falls on Christmas Day, which is kind of a nice.
I didn't know that. But so look, if you can guarantee a Friday holiday every year, that's a pretty good deal, right? So
100%, yeah.
That'd be my theory, but I don't.
And I think you nailed it too, Brian. It's the people who were on the floor back in the day. They were Irish, they were Italian. It was heavy Catholic exposure.
Yeah, without them, without the runners or the market maker, they couldn't operate the exchange. So
yeah,
cool.
All right,
market history.
I'll see you guys in a couple weeks, right? Spencer, you going, Spencer?
Nah, man, dude, I was just out there like a month ago. It's so far. It's so.
Yeah, I hear you.
It's so far.
When were you out there? Oh, you were at the studio.
In what, July, August? When was I there? August. So 2 months ago. Credit to you, Steve. You're making several cross country flights in a not
that's for sure.
long amount of time. So
Florida to LAX, that's a tough trek.
My back's still bothering me from the last trip.
Yeah.
I hate planes.
All right. Thanks, Brian.
Bye, Brian.
Yeah, thanks, guys. Bye.
And he's gone. All right. Oh, hey, we're open. 9:34. God, one of these days I have to get a opening bell sound effect. I keep forgetting to do that.
Natural gas, uncorrelated trades for the win. They're so important. I think we did a really fine job at positioning our portfolios over the past month or so in a lot of uncorrelated trades. And weeks like this week, where equities are not working, those uncorrelated trades can really bail out your portfolio.
Can we pop up that Nike chart real fast? Funds we're down more now, down 8%.
Look at interest rates today. So Powell talked yesterday. Did you listen?
I didn't even know that. I'll be honest.
Wow. All right.
What are we doing here?
No, long-term bonds are down pretty big this morning, TLT. They're all down big.
Yeah, they're all down. KNX is down. They're all down.
Okay.
Where's my? I even have TLT up. What the hell?
And we're all writing stuff about the dollar holding the lower bounds. Man, this thing can't make up its mind out here. You like those posts about the dollar index? You like to read about the dollar index?
I did. I especially like when someone else on the team likes it enough to emphasize it more, right?
Well, what we're finding is with all of these emails and short notes, we're all writing about the same things on a near daily basis. So, something we got to figure out, I guess.
Yeah. So good email yesterday. And by the way, guys,
this is it. Yeah. Up is bearish, right? Down, line go down, bullish. It's really that simple. Right on the lower bounds. We've been knocking on the door 1, 2, 3, 4, 5th time over the course of 2 years. Interest rates also looking very toppy out here, but digging in and firing higher today. Another up day for the dollar. And if you look at the euro, 60% of this index. So think of the DXY as short euro and then some other stuff. This base is going to break out at the same time the dollar resolves that top and breaks down. The euro failing pretty miserably at the upper bounds here this week. So this needs time. Both of these patterns need time, is what the market's telling us. I think you eventually get these resolutions in the directions we're talking about. Euro up, Dixie down, right? Puts a nice bid in the market. Big Q4 risk asset rally. But how long that takes, I don't know. Maybe we're back to that playbook of get through the election. We're a month out, Spencer. It's a month away. Hey, I heard JD Vance mop the floor with this Waltz guy last night.
I'm proud to say I didn't watch. I don't think I've ever watched a vice presidential debate.
I'm with you, buddy. Vice presidential debate so far below my line.
So far, but I was I was on the Twitter and all that last night, and I saw first I saw actually a lot of people saying, "Wow, this is such a great debate. They're actually talking about policy and they're being respectful." And then I saw other people that were like, "This debate sucks."
Yeah, nobody wants that. Who wants that?
I don't know. I don't know who to believe. Was it a good debate? Did it suck? I don't know.
I heard they were very nice to each other. Yeah, I heard it was
yeah.
Nothing I want to say.
I don't know.
But here's the truth. Here's the truth. Can we just be honest about vice presidents for 1 second? These people, listen, they don't matter. Nobody knew who Kamala Harris was until 2 months ago. She's been vice president for 3.5 years. Who knew?
People knew.
Where are they hiding her?
People knew who she was.
Vice president, like why do we even have these people? The show Veep, where what's her name? Elaine from Seinfeld.
Yeah, Julia. Yeah, it's a tremendous show. Tremendous show.
Some of HBO's best work. But they're just making a mockery out of the vice presidential office. That show, is it not? president too. It's very funny. But anyway, the real takeaway here is the vice presidents really don't matter.
No, I don't think anyone thinks they matter, right? I think even they probably don't think they matter, right?
Maybe
So-
that's changing, Spencer. Presidential candidates getting shot at every other week out here.
and being 80 years old. Yeah.
There's that too. So.
Yeah. All right. Let's see. What's on my list for the day? So Nike, I mentioned down 7 to 8%, somewhere in that range. They suspended their guidance. They had earnings last night. Their earnings weren't good.
No,
they had to suspend their guidance. They're getting a new CEO. Basically, it's like kitchen sink. Whatever bad news you have, throw it out there because it can't get much worse.
Yeah,
so
that's absolutely right. That's the dynamic, right? Executive office, big change here with the new CEO. They're going to throw it all in and get it all out of the way. Also, Spencer, it's one of those situations where, it's a market miss. And by that, I mean, stock's down 7%, but it's up off the September lows into yesterday, it's up 15%. So it's rallied into the report and it's still up from its lows of the month, but a considerable amount. So this one, was it really a miss? When you run into the report like that, I think it's okay for Nike. Maybe Nike's finally finding a floor here. The bigger point about Nike is there's some real competition out there, and they gotta kind of reposition themselves and figure this out because they're losing market share like crazy, and I don't see it stopping. Nike is no longer cool on the golf course, and I think that's huge. That's just a big departure from the way it's always been.
Oh shoot. Okay, what else jumps out to me?
Under Armour looks great too.
I know. Right.
Lulu's digging in. So these athleisure stocks do have my attention. I guess you would call it traditional athleisure.
Did you say Under Armour looks good? What?
Yeah, man.
No way.
Yeah, it does. Look at that base. Zoom out on that thing. Under Armour shaping up for a textbook trend reversal here.
That was the first stock I ever bought.
I bought some Under Armour shorts yesterday from the clubhouse.
All right. Whatever.
October sale.
I think I know you asked Jason first to hop on, so we have him here. We have Mary here as well. So why don't we bring on Jason and then we'll bring Mary on?
Great.
All right. Oh wait, Jason, I have your bumper actually as of like an hour ago. So let's
perfect timing.
Wait, what did I do with it? Where is it? Here it is. Check it out. Huh? How'd I do?
Nice. Looks good.
Do you approve?
Way cooler than I am.
All credit goes to Izzy, not me. But
they made you look like a big deal, Jason.
I am a big deal, Steve.
Hey, listen, I'm glad you're on. I'm in some weeklies in Nat Gas here.
Ooh.
We got a runner on our hands. What goes on? War good, war bad? I see Saudi Arabia headlines.
War good for natural gas. I mean, if we're
Okay.
just, but I think a thing that you said earlier that's really cool, and we can kind of talk to our research a little bit more at All Star Charts, which is the fact that we have all these uncorrelated trades. Like when the bond trades were the only things that were working, we were long bonds. Now we're long natural gas. Like these uncorrelated trades can really protect your portfolio when nothing else is working. Like our portfolios are doing really well, even though not much is working right now.
My equities trades are not doing well this week.
Yeah, that's about it. The commodities, I mean, they're starting to perk up, and that's kind of the last post you and I were working on, the one I posted about the bond market, which is the oil being the biggest catalyst that could destroy our bond trade. And that's kind of what we're seeing here is that, the oil's kind of sniffing out, and oil does this. Oil trades like the economy is in the present. So if we're looking at oil and we're looking at this bounce and we're going, okay, well, inflation could be ticking up now. Oil's kind of sniffing that out and saying, yes, that could happen. Natural gas is the alpha to that trade, which is also the geopolitical risk. And also that's a bit what's going on in oil. But I do see a bottom kind of forming here in oil. I do see that natural gas is starting to run. I mean, it looks like energy is starting to look really good again. It could take some time.
I love JC's point. That ExxonMobil chart is so good. It's really, really good. You zoom out, it's fantastic. You zoom in, it's even better. You got this little base on base. Thing's been waiting like a decade to break out. I also
Excellent.
think, yeah. Go ahead.
Alfonso, I sent Alfonso a chart if we could get to it. Alfonso, you have the chart, which is from the correlation with the 70s to
Chart
today.
on. Chart on.
Doing that now.
Chart on. Oh, great. Talk to me about war.
All right. So this is one of the charts, and this chart is basically kind of signifying what happens in the commodity market. And what I'm getting at here is that we don't usually see these bottoms kind of play out like you would in the in normal markets. Whereas commodities, when they start to move, it's going to be a V top again, as you saw, like oil front month goes negative, and then V top, boom, oil starting to run. This is kind of what we're looking at here. Not saying, you know, the war and things, that's going to be the catalyst for the top. I think we're more towards a bottom here in most of the commodities. I think gold sniffed that out a while ago, and that massive run we have for gold is really telling us that the rest of the commodities complex is going to move probably by year end. So I could see this thing V topping here. I wouldn't bet against the trend just yet. Once again, I don't have anything wrong with equities. I'm long equities at the moment as well. I just think that we could definitely see a trend reversal here. And oil, it gave a false breakdown signal. That's a really high probability signal that goes higher.
Yep, did. I love this. And you got interest rates digging in and bouncing here today also.
That's the thing that this whole trade has kind of been on, Steve, which is we're kind of looking at that possibility of interest rates just changing trend, you know, bouncing back up here. You know, the long-term trend for interest rates is probably higher. If people think that interest rates are going to go back to zero anytime soon, I think that's ridiculous. I think interest rates, the trend is probably higher here. What do you guys think about that? Does that make any sense to you? Because I'm trying to ask people this question because it sounds so crazy right now. But I think the Fed's going to cut rates, but I think the long end of the curve could possibly move higher.
I think the market was a little bit disappointed in Powell's lack of enthusiasm for future cuts yesterday. So I think he told them to expect a single cut at both of the next two meetings. And I think based on Fed fund futures, they're expecting more like 2, 3, or 4. Right?
Yes. You were looking at 50 basis point cuts again and again and again. So we're looking
just like anything. This is important to point out. So just like anything else in the market, right? The bond market discounts that. It's pricing that in, right? If the market thinks you're going to get 4 cuts through year end, then the bond market's pricing in 4 cuts now. If you only get 2 cuts through year end, then you could actually have interest rates rise, particularly on the long end of the curve, even while the Fed is cutting. Is that fair?
Yes, and that's the same scenario happened in 2018, and this is kind of the interesting point that a lot of people forget is in 2018, the Fed was raising rates and the bond market went the other direction. So basically, the Fed was raising rates and the long end of the curve started going lower. So the long end of the curve, the 30 years, started going lower as the Fed was raising rates, and that signified actually a bottom in the bond market. And now we have the opposite scenario, which could signify the top in the bond market for now. So really, I think it's a really interesting time to just kind of look at that and go, okay, like I'm not going to bet against the bond trade here, but I do want us to keep looking at oil, maybe taking my energy signals and being ready for that trend to start happening.
And so the spread between the 2-year and Fed funds is like more than 100 basis points, right?
Yes. Yes.
So even the short end. So if you get 2 cuts and they're expecting 4 based on where the 2-year is, even the short end could move higher.
Yes, and it would have to,
up, right, and clean up that divergence with Fed funds.
Yes, and it would have to. That makes perfect sense. I mean, it's really the scenario here is a couple things. One, if they cut rates, and this is where the Fed is in a very tough position right now. If they continue to cut rates in this to this level, and let's say they cut 50 basis points and then another 50 basis points, we're going to have inflation get out of control again, and they know that. So that's the reason why they're trying to be timid, hesitant, not get the market too excited, because if the market starts to sniff out that inflation's coming back, it's going to be bad for everybody.
Yep. No,
except for us as commodity traders.
I feel like this is actually the hardest position the Fed is going to have to manage its way out of over the past several years. I mean, COVID was really tough, right? But maybe since then, this is the biggest question mark. I think it was very clear what direction they had to move in, and almost to a degree, how much, right? Up and down this cycle. And now it's kind of like, now what? Right? Where you're talking about inflation ticking higher, they want to cut rates. This could get sticky. This could be a little bit messy for Jay Powell and friends.
Yeah, and the situation is going to be interesting, and I think it's more of it's not crazy to think we'd see a little bit more volatility before the election one more time, and then possibly after the election the market would be euphoric and just rally to year end. So I think that it will end up playing out to where equities are just fine towards year end, but I think in the short term we're going to see a situation here that could affect equities just in the short term. Long-term traders like me, I don't even care. I'm not even going to notice volatility. I'm going to stay long my positions. But if you're a short-term trader, you might see some volatility. You might see some hesitancy on rate cuts. You might see some volatility in the bond market. But besides that, I think most of the trends will hold up. But the big reversal I see is bonds and inflation. So bonds and basically oil. Continuing to look at oil, take those signals as you get them as traders.
It seems like there could be some offsides positioning here by the market when it comes to the bond market and the future of interest rates.
Yes. No, absolutely. So I'll let you guys go. I know you got Mary coming on in a second. It's 10 minutes to go. So
yeah. Jason, hold on real quick before you do go. Mm-hmm. You've talked about oil. Copper's up. Freeport-McMoRan's up 30% over the course of the last 3 weeks. China certainly appears to have arrived to the bull market. Any thoughts on copper?
I got a lot of thoughts on copper. It's higher, absolutely. That's fundamental. If I'm looking at it fundamentally, technical at the moment, I'm seeing the same thing. We're long copper again. It had a breakout signal. So basically, to me, you look at China, the situation in China. If China is actually growing, copper is going to grow as well. Just look at the chart of China. You don't have to dig into their fundamentals of the entire economy. Look at the chart. FXI moving higher most of the time. Copper is going to be a good bet.
And from what I hear, actually, what's driving this is they're not even growing their economy. They're shrinking less.
Yes,
that's the sentiment set up here, which is as good as it gets, right? When less bad news is actually good news for the market, just being less bad, that's good. You don't even need the good stuff yet.
Yes, and I think the copper story also has to do with an undersupply. We have a massive undersupply of copper. We're not finding a ton of new copper in the ground. It's just a situation where we have a massive undersupply. We have more buildings coming up. All of these things are starting to pick up once again in certain countries, certain areas, and copper is a global growth thing. So if we're seeing global growth growing, we're going to see copper moving up. Most of the time, copper hints at that before growth shows up in the ISM or the PMIs and so on. So if we see copper start to move higher, I would say, hey, we're kind of looking at more of a growth story. And I think that reflation trade that we're talking about here, which is bond prices going a little bit lower, oil prices going higher, copper prices going higher, possibly markets like energy, financials moving up. That's that trade that I think could possibly happen here towards year end.
Love it. Thanks for joining us, Jason.
Thanks, Jason.
Of course.
All right, let's bring on Mary. See what's going on. Hey.
Hey, guys. Good morning.
What's doing?
Hello.
Busy day, busy day.
A lot going on.
We'll see.
We'll see.
Right?
Yeah. So,
right, talk to me, Miss Warren Buffett.
we'll get to there. Last week, I feel like I'm such a schizophrenic trader. So last week, we were talking about crypto and getting long on some short-dated calls, which ended up working out really well. Of course, now I'm looking at these calls that expire here on Friday and wishing I had sold all of them. Some worked well. I mean, I'm in the green. I was able to sell some calls at 250% overnight. So, I'm not mad. But I pinged you last week just because I've got a list of favorites that I'm just always following, and I'm at the end of the week, I'm looking through charts, and I pinged you with the accidental petroleum chart just because we talk about it all the time in Warren Buffett, right? So it's just on the list. I looked through it, and it caught my attention, and I sent you guys the weekly chart. But then after I had pinged you guys, and we kind of had the discussion, energy, oil, I did the zoom out. Shout out JC Parets. I did the zoom out to the monthly, and my anchored Vwap from the highs in 2011 were hitting right at that 50 level where we were trading at. There's market memory there from back in 2005, 2011. And I thought, you know what? We're really oversold on the weekly, or at least we're oversold somewhat. And I'm just going to kind of take a swing at this. And so I got long just a small position, just kind of as more of a mean reversion on Friday. And I mean, who could have predicted the events of this week, right? But it's worked out. And then, Jason's just on here a minute ago talking about commodities and oil. And so I guess we'll kind of wait and see. Maybe Uncle Warren hasn't lost his touch. But this was really, for me, when I got into it, just a short mean reversion trade. It's working out so far, but maybe it'll end up being something more as we go. I don't know. We'll see.
Yes.
No, but I think you need to plan the trade and then trade it accordingly. So I like what you're doing here. It is super cute. I wonder, listen, if I were a betting man, the next Form 4 you're getting from Buffett is going to have an S at the end of it, not a P. And I really wonder if he becomes a seller at the same place where he was support, right? And then he becomes resistance at 56, 57, 58. So if you're trading here, you're trading this pop, which you're already getting, I would just be out like aggressively, super tight as soon as you hit that breakdown level, which is coming up, I don't know, 3-4% higher.
Yeah, exactly.
I think that's going to be a wall of resistance. If it's not, then I think that's a new trade for sure. But I think Buffett's done. Buffett's done with this thing.
But
I guess we'll have to wait and see.
Well, he's selling oil. He's been a net seller of oil and gas stocks all year. And if he's got a different bullish thesis on Chevron than Occidental, I'd be shocked. So if he doesn't like one, I find it hard to believe he likes the other. That's like saying, I'm bearish McDonald's, but I'm getting along the Burger King here.
Hey, people would do that. We talked about it yesterday, Steve. And Mary, Mary, to your point about
Warren Buffett doesn't do that.
That's true. He doesn't. To your point about the plan, you can never really be mad about yourself if you stuck to your plan, right? If you had a plan, you stuck to it. There's really nothing to be angry about, even if you lose money, right? Because you did, or if you sold early, right? There's really nothing. You can't be upset if you stuck to your plan, right?
There's definitely a trade here. What else you got, Mary?
Well, that was really the only chart that I brought along, just because I'm still watching the crypto space and I'm wanting to find a spot to get into China. And we talked about this last week. I'm just not going to chase up here. So, I've got alerts set and kind of waiting to see if we get some pullback, consolidation, something. Baba and TME and.
When you get this kind of starting line momentum, I mean, this is a initiation reading for the history books coming out of China. You have time, not just days. You got weeks, you got months, right? Wait for a couple week pullback in China for things to really set up. And you know what you're going to get? You're going to get some of these early base breakouts. Like if you look at a 10 cent, you're going to get a sweet retest of that base breakout level. And I think that's really the playbook for China right now. You could do cute things right now, but this is a crazy market to try to navigate through right now. Every new morning I wake up to alerts on my phone about the Hang Seng and the Shanghai. So,
well, not the Hang Seng this week, Steve, but I get your point.
So Hang Seng's open today, though? No. Hong Kong.
I thought they were closed for a week.
No,
they're closed. So what? So what local market in China is open? One of them is open.
There is no local market that's open. It's all us, baby. It's all us.
Wait. They're all closed and this is happening?
Hell yeah.
They got to figure this out. Like, you can't close your market for that long. If you want to matter, like, this is the most ridiculous thing ever.
Hey, anyway. Somebody overnight is bidding up all the ADRs and Chinese ADRs. I don't know who.
Brian Lund wants to poke fun at U.S. markets for Good Friday. What the hell is Golden Week?
Hong Kong is open. My mistake. Sorry, everybody.
Told you.
All right. Fine. All right. Let's do a retest and get out of here. I don't really, I was gonna say happy New Year to all those who celebrate. The one food that you're supposed to eat around this holiday is apples and honey. So I'll be having that later tonight. And happy New Year, everyone.
Apples and honey.
Apples and honey. It's supposed to signify a sweet New Year.
You do a little brie with that. A little brie would go.
No.
Warm
No.
brie would go nice.
Apples and honey. It's a good combination. You should try it.
No brie.
No brie. No
Nope.
brie.
Okay,
That's what I got.
All right, Mary.
Well, so for me, I brought a picture along. I usually do. I
Oh.
realized that today. I'm always bringing pictures. So it's a sad day in our
Bye-bye,
house.
Bo.
What's that? Bye-bye boat. Yes,
Yeah,
the boat got pulled out yesterday. It's the end of the season, which makes me depressed because it's like 7 months until I get access to my moat back, and that means all of winter and the cold gray bucket of suck that exists here in the north for too many months.
From what I understand, the next time you're going to be on a boat might actually be in the Florida Keys.
Oh, yes. Actually, that is very likely.
Bang. Awesome.
Yep. So boat is away, and boating is done here in Michigan, at least for my family.
It was a good summer, though.
It was a great summer. In fact, Steve was begging me on, I don't know what day was that, Thursday. He's like, sell the double. And I'm like, God, I'm out on the middle of Lake Michigan, and all I see is blue. I don't have any internet.
Just giving you a
reception.
courtesy reminder to sell your double.
Exactly. Yeah. So it actually worked out great because the next day I was up even more. So it's all good. But we were winning. But that's my recess. Boat's gone. Boat's away for the winter, taking its little nap.
Next time.
I got nothing. I got nothing to join us. Hot corner at 1 o'clock.
Hot corner insider people, you know where to be. 1 o'clock. Mastermind folks, we'll see you at 4. All-Star Charts conference call at 6. A lot going on today. Thanks for watching. Thanks, Brian. Thanks, Jason. Thanks, Mary. Smash the like. Go make money. See you later.
Bye.
Hump day.
I can't take no loss. I don't even